traders. Well, many were in the market yesterday asking whether that equity rally after Jerome Powell's, what I would describe as fairly hawkish comments, was a dead cat bounce or a genuine revival in risk appetite. You know, he said that we'll take rates above neutral and we'll continue to raise rates until we see actually inflation coming down. Looking at Asian markets, the close, we saw the ASX, the Aussie index in the green, as well as the Nikkei. However, the Chinese index couldn't follow in that direction. And it's a sea of red across the European and American markets this morning. We had some UK inflation data out earlier this morning. It's at a 40-year high, 9% year on year, largely due to that energy price cap lift. We also had tight labour market data yesterday. That actually caused a bit of a pop in the pound higher. The unemployment rate fell to the lowest since 1974, and we saw those wages higher than expected. There was a significant net short positioning, which obviously could have caused a bit of a short squeeze higher, and the UAE took a stake in Vodafone, so maybe some GBP buying there. We also heard some pretty significant news on the Brexit front. Liz Truss announced in the House of Commons that she wants to bring forward legislation to disapply parts of the Northern Ireland Protocol without actually scrapping it in its entirety, but that will be coming in the next few weeks. Sefcovic from the EU side said, that the EU will have to use all tools at its disposal if parts of the Northern Ireland Protocol are disapplied. We also saw the euro-US dollar have a pop higher when Dutch Central Bank Governor Nott announced that 25 basis points in July is realistic, and not to actually rule out 50 basis point hikes. That was what the significance was for the euro-US dollar if the inflation data starts to broaden out. Finishing off on crude. Crude was a bit of a roller coaster ride yesterday. We saw that the announcement from the Biden administration, basically that they would allow Chevron to look at their oil licenses with Venezuela, potentially lifting sanctions there, and growth fears a bit from Powell's hawkish comments. And then we saw overnight that US inventory surprised with a big draw when a build was expected, and that's caused it to bid up a bit higher. And the 115 level is still very key resistance.